So if you're a business owner and you keep asking yourself, why am I always broke, yet I'm making sales? Please listen in this episode. You could be profitable, but still close down your business because of cash flow shortages. Hello and welcome again to another episode of the Prosperity Thrive Drive. My name is Charity Mwangi, your host and a financial consultant. So today we are going to talk about something that businesses are unable to differentiate, that is cash flow versus profits. And we'll also look at why businesses struggling with both is one of the reasons why businesses collapse, even when they look successful on the outside. You need to note that you might be profitable on paper, but you are not able to even pay your bills. And we'll look at what this means. Understanding the difference between cash flow and profits is very crucial for your business in keeping your business afloat and thriving. So let's start with the basics. Let's define what cash flow is and what profit is. So profit is basically the money that is left after deducting all your expenses from your revenues or from your sales. So it's what businesses earn on paper. Cash flow, on the other hand, is the actual movement of money coming in and money going out. So there are different types of profit. And number one, we have the gross profit, which is basically the revenue or sales minus the cost of goods sold. Then we have the operating profit, which is the gross profit less the operating expenses. Then after that, we have the net profit, and that is what is left after deducting all the expenses, all taxes, and any interest. So cash flow also can either be negative or positive. So positive cash flow is when you have more money coming in than going out. And negative cash flow is when you have more money going out than coming in. So let's look at an example. Someone is making a sales of 500,000, and from that 500,000, their profit is 200,000. But in this case, the clients are not paying promptly. They are not paying whenever they get the services or the goods. So meaning this business person does not have money in the bank. They only have money on paper. It just shows that they sold something for 500,000, and from it they got a profit of 200,000. Yet the client that bought that good or they were offered a service, they are yet to pay for the service or for the goods. So in this case, we see a cash flow problem, not a profit issue. Let's continue to look at some other real life examples. So we have Sarah, who owns a printing and branding business in Nairobi. So in 1 month, Sarah made 300,000 in sales. However, 70% of the clients she has will only pay after delivery, and that will be after 30 days. Meanwhile, she needs to buy materials, she needs to pay for rent, and she needs probably to pay for salaries. So on paper, she was actually profitable. But in reality, she was struggling to pay for bills and even buy more materials for the next project. So this is a cash flow trap situation. Now let's look at another case. We have John, who sells boda spare parts. He makes 50,000 in sales every week, but all these sales are paid cash by the customers. But unfortunately, John spends everything on restocking the spare parts, on other business expenses, on salaries, on transport, and all that. So in this case, his cash flow is constant, but there is no profit. So this is what we call a profit trap situation. Why do small businesses get stuck in these two situations? Number one is poor record keeping, and we've done a video on bookkeeping for businesses in the previous episode. So most SMEs don't track their daily expenses, their daily revenues, their daily bills, or pending receivables or payables. So you cannot know whether you're profitable or have a positive cash flow if you don't do basic bookkeeping. Number 2 is not separating the personal and business expenses. So many business people treat business income like personal income. They end up paying their personal expenses from the business wallet or paying business expenses from the personal wallet. It's very important to separate the two so that you can be able to know whether your business is profitable and whether your cash flow is positive. The other thing is over-reliance on credit sales. So you're excited when a client places an order, but you don't put in place policies on when that client is supposed to pay for that order. The other issue is not planning for recurring expenses. When you have a business, there's definitely some expenses that will be recurring on a monthly basis or even a weekly basis. For example, you'll have rent, you'll have salaries if you have employees, you'll have transport, you'll have meals and all that. So if you don't plan for these recurring expenses, you will mess up your cash flow and your profitability. The other one is lack of financial literacy. Most businesses will focus on sales. They will not look at the business profitability and the business cash flow. So you must understand your numbers if you are to grow your business. So the difference between profit and cash flow is very simple. Profit is like taking a photo. So it shows what your business earned over a certain period of time. And cash flow is like a video. It shows how your money moved every day, every week, and even every month. You could be profitable, but still close down your business because of cash flow shortages. So you can have a scenario where your customers have not paid you, yet your suppliers, your landlord, your employees are asking for their money. So how do you improve both the profitability of the business and the cash flow situation? Number 1, you need to set clear payment terms. Encourage upfront payment from your clients or even 50% deposit, and then the other 50% you're paid on delivery of the services that you're offering or the goods that you're selling. So this will improve your cash flow immediately. Number 2, track your expenses on a daily basis. Know what you're spending your money on. And you can use very simple tools like Excel, where you can list all your expenses and the amount that you've spent on those expenses. Number 3, separate business and personal money. Open a business bank account, pay yourself a salary so that if you have any personal needs, you're able to pay from your own account. And then for the business expenses, you pay them from the business account. So don't withdraw money from your business till or business bank account to pay for your personal expenses. The other thing that you need to do for your business is budgeting. Know your expected income for the month. And you can only know this if you have been doing bookkeeping before, so you can be able to tell the average sales that you receive on a monthly basis. You'll also know the expenses that you pay on a monthly basis. You'll have the fixed expenses and you'll have the variable expenses. The other thing is building a cash reserve for your business. In other terms, having an emergency fund for your business. You should have at least 1 month's worth of total operating expenses for your business saved up and ready for use. So this gives you a breathing space when clients delay payments, and it also gives you peace of mind. The other thing, consider increasing your profit margins. And it doesn't mean that you must increase your prices. You can negotiate better prices with your supplier. If, for example, you're selling a phone and your supplier is selling it to you at 5,000, and that phone you sell it for maybe 8,000, this is an example, then you can negotiate with your supplier if they can sell to you that phone for 4,000. So that way you'll be able to increase your profit margins. The other one, of course, you can consider increasing your prices, but you only do this after you've done a research based on the market and based on what your competitors are offering. And if you go ahead and increase your prices, ensure that you're offering more value than your competitors so that you do not also lose your clients. The other one, you need to understand your break-even points. And this is the point where your sales and your expenses match. Know how much you need to sell before you make any profit. So this is able to guide the daily targets for your business and the pricing strategy that you use. The other thing is you need to consider reviewing your credit terms to your customers and also negotiating better terms with your suppliers. So in this case, if you have credit terms with your suppliers, you need to extend the period. If they are giving you 30 days, you can negotiate for 45 days or 60 days before you make the payments. But for your customers, put in place credit terms that are shorter. You can give 10 days or 15 days. So this way you'll be able to improve your cash flow. The other one that you need to do is improving your invoicing and collections. Ensure that you send your invoices promptly and follow up consistently. Then you can also consider offering discounts for early payments for your clients. You also need to avoid unnecessary expenditures. And this is where budgeting comes in, so that at any given point, you know what you're supposed to spend the business money on. So don't be deceived by profits and start spending on luxuries. So as a business person, you need profit to grow and you need cash flow to survive. So these two go hand in hand. You cannot have one and not have the other. So if you're always broke as a business person and yet you're making sales, it's time to have a financial health check for your business. So start with bookkeeping, know your numbers. So that is the income and the expenses. Plan your payments, budget your income and have a reserve. And then also monitor and review your cash and profits regularly. So if you'd like help with your bookkeeping, with your business structures, with financial systems and business policies, my contacts are on the screen and I'll also attach the same on the description box. So ensure that you track your profits and track your cash flows and let your business thrive. Thank you for joining me on this episode. Please like, share, comment, and subscribe if you haven't done so. See you in our next episode as we grow our businesses and we cause them to thrive.